Hello, everyone. Hope you are enjoying Stable Summit so far. This next panel is about UX security and building user trust in stablecoin payments. We've seen a huge rise when it comes to the stablecoin adoption. I think last time I checked a few days ago, the market was at 297 billion. But on this panel, we will focus on some of the challenges in the stablecoin adoption, and most importantly, how we overcome those challenges. Maybe before we start, we do a short round of intros, and also what you're building. Tell us a bit what you're building. I'm maybe gonna start with myself. So my name is Bianca Buzea. I'm head of DevRel at Chronicle, the oracle for tokenized assets. Chronicle has been around since 2017. In 2023, it spun out of Maker. And today, as Nick was mentioning earlier, it powers around 19 billions in assets across DeFi and tokenized assets. Maybe Jillian, do you want to go next?
Hi, my name is Jill. I'm the Chief Operating Officer at Symbiotic. We've built an economic coordination layer to secure really thing that requires trust on chain to provide the building blocks for economic security through staking and security.
Hey guys, can you hear me? My name is Ron Barrett. I'm not Ido. Ido couldn't come. He's had an emergency, personal emergency, so he couldn't make it. I'm a solutions engineer at Blockaid. What Blockaid does is a security solution for basically anything Web3. We do things such as supporting end users through the wallets, monitoring of protocols, smart contracts, fraud prevention, and as well as operational security, so things like cosigners, additional offerings.
Hey everybody. My name is Bryce Ferguson. I'm co-founder and CEO of Turnkey, which is a low-level wallet infrastructure company that works with folks like Bridge, Polymarket, Moonshot, Axiom, Alchemy, a whole bunch of other folks within the industry. We power different key management flows behind the scenes, whether that's businesses managing their own stablecoin flows or end user wallets where users use simple Web2 style authentication to access a stablecoin wallet.
Hey everyone. No.
Thank you.
Hey everyone, I'm Hugo. I work at Immunefi. You may know us from the bug bounty world, but these days we are end-to-end on-chain security platform doing everything from monitoring and operational security to formal verification and firewall. And we do this with a bunch of partners on the security space because, security can't be a one-man's game.
Love it. Thank you so much. Maybe we start with an overview of the current UX of stablecoins. What would you say a card level experience would look like when it comes to stablecoins?
In many ways, we're just going to share. In many ways, I think we're there, actually. You look at some of the stablecoin neobanks that are popping up and some of the experiences around stablecoins. And if you look at it from a user perspective, it's really, really easy. You can use a normal card through someone like Rain. You can lend that out to Aave or Morpho and earn 8 or 9%. All of these things are really in place. I think what we're missing is some of the connective tissue between traditional fiat. I mean, on-ramps are still tough. Some of the ability to interoperate with other financial platforms is hard. Stablecoins are a little bit an island of their own. But a lot of the UX has been solved over the last couple of years. I think trying these apps, it's pretty amazing.
I'll just complement that in addition to like the friction and the ease of use, the major issue is security. It's like people feel afraid. And stablecoins seem stable, but in front of us we have the presentation from the next speaker, and he jokingly calls this the unstable summit in Buenos Aires, and that's what people feel, because a credit card, like the major value of it is fraud prevention, or if someone wrecks you, like you trust that the credit card company is going to make you whole, or is going to make you whole in a world where stablecoin payments are dominant. But then the question that I would also like to think about is whether stablecoin payments being dominant, whether that's like desirable for us or not.
I would also just add that I think there's still like we have come a long way, and also saying this as a business that operates almost entirely on stablecoins, like there's still a lot to be done with respect to account abstraction and making it like even more seamless. Still like relatively easy, especially compared to like traditional banking. But I think the big unlock is going to come also with like just easier access to credit. Most even like crypto credit cards are still not actually credit cards; they're just cards. So I think that's a really exciting thing that's being built.
Yeah, I guess one last thing to add here is security is important, like Hugo said, and I think security builds trust, right? The problem we have in this space today is lack of trust from end users. So securing all of the different steps of from the very first step of issuing a stable coin and then implementing all of the different use cases is critical, because once things are secure, trust will increase and then the users will come. So if you build it, they will come.
What would you say, maybe building on that, what would you say stablecoins must do better than solutions like Visa or MasterCard for them to become the default choice and not just an alternative?
Yeah, so maybe I'll take it because I was last.
Go ahead.
So the stuff they need to do better, well, there's many different things. I'm going to speak about the area I'm most familiar with, which is security, and it comes down to making sure that every different step of the process is monitored, and you have the right actions in place when something happens. So, for example, you want to make sure that if by any chance, you have a $300 trillion mint by mistake, that you're aware of it immediately and that you can take an action immediately to make sure that your end users will continue to use your stablecoin. And similarly, you want to make sure if you're a protocol that's using stablecoins, you want to monitor the different aspects of those stablecoins that you're using, and have the ability to maybe reverse a position if there's a depeg event. So all of those things are critical, I think, to increase trust, like I said.
I'll add to that. The question was, how can we do it better than it's already? Yeah. I think we have a huge opportunity to build it better by resolving a lot of the trust issues inherent in like the modern payment system, and specifically, if you even look at like credit cards and how much friction is involved with fraud and detecting fraud and chargebacks, and like that whole part is such a big cost center for the card issuers, but then also such a pain point for the users. And we can kind of deal with those issues through solutions like economic security, through, yes, like security and like having like secure systems, but we can also deploy like the basic ethos and premise of blockchain, which is eliminating the need for trust because you have incentives and economic security. And so that's something that I think is a really cool opportunity for us to collapse the friction that pre-exists in payments and just create something entirely new, much more seamless and automated.
I think another piece here is we're often talking about how does crypto replace our normal credit cards and day-to-day Western financial services. But in reality, those work really, really well. Like my Visa is great and I can go and use that at a lot of different places and it is super low friction for me and I get my rewards points and all that is really, really nice. I think a more interesting question is where are stablecoins going to open up innovation in really 10x ways, use cases that we haven't imagined at all yet. One of the things that we talk about a lot at Turnkey is what does money look like when it is truly streaming in real time? You have agent-to-agent commerce happening in a real way. You have new kind of like uses with DeFi plugging into that broader ecosystem. I think that's where things start to get much more interesting on the stablecoin side. And it ties into a lot of the things that people have been saying here about security. I think the needs for guardrails in that world where money is streaming and not just being sent in chunky transactions is really different. And the way that we have to look at that is quite different over time as well.
Building on this and something Jillian said on the previous intervention, I think that there are two angles to payments, even in this panel. Like one is the retail payments and the other will be payments as transactions, especially in a business context. And for stablecoins to win, like first and foremost, we should, and notwithstanding how great or convenient it is to use Visa and MasterCard, and they earn their 1% or half whatever fees for having built this infrastructure in the world that was very much not digital and creating this ability for people to travel and easily pay. But still now, that's beyond. They have become just dinosaurs and are rent-seeking. And the promise of crypto is to make the world more efficient and cutting into those old fat cats. And so if not Circle or Tether, other decentralized or centralized players should really have the ambition to destroy Visa and MasterCard and create better networks for payments in the world. If we want stablecoin payments to make sense and to be something that we want to use, then of course with all the issues to be solved on the security side and whatnot. But then on the payment side as well, on the transaction side as well, I think that's even more interesting because, again, payments have been solved, and so it will be difficult to destroy Visa and MasterCard. But on the business world, it will be very much easier to perhaps destroy some of the control of financial institutions in making business less friction, having less friction. For example, you could have stablecoin payments working with, or like stablecoin companies offering factoring services to their businesses and creating a whole new tech stack on top of business-to-business payments that will make everyone's lives easier from invoicing automation purposes. But even that, because that's just software, but on the automation side of the payments. And I think that's where the opportunity lies to make something like really interesting on this space.
We touched briefly on guardrails earlier, but I think this is a very important topic and I would like maybe to go a bit deeper. What role do you think features like watchtowers, circuit breakers, spending limits play in this ecosystem, but without making it feel too restricted or too complex to users? Or maybe there is a way to abstract these guardrails. What's your take on that?
I'll kick us off on this one. So I think it's going to be different depending on the application. And that's maybe a cop-out answer, but the controls that a business that is sending billions of dollars through crypto pipes needs are going to be very different from a consumer buying their coffee at their local coffee shop. With that, I think folks just need very, very flexible building blocks for how they can establish policies, how they can have controls in place and make sure that that is able to serve this wide variety of use cases. Because part of it is we actually don't know. We don't know all of the ways that people are going to want to put controls in place. My gut is for most consumer use cases, not giving exposure to these controls is going to be more important. For business use cases, giving deep control over these with smart defaults is going to be the path forward.
Yeah, I think like the role of watchtowers is just one of several tools to enable things to be challenged and for there to be implications there. And like all of the infrastructure exists for that to be enforced, and it's critical. It's extremely important to be able to have all of these measures in place, and we can deploy them through like, for example, Watchtower is not the exact same thing as an Oracle, but somewhat similar. And with Symbiotic, we're actually securing several oracles through the CCIP oracles with some of the networks that they work with. And we're seeing a lot of interest in that kind of usage for staking and for slashing, because it just makes a lot of sense to have not just networks secured by economic security, but also oracles, and this idea of actors behaving in a certain way, and if they don't act in the way that they're supposed to, there being some sort of implications there. And yeah, so I think that that's critical.
I agree with that. Abstracting that layer and having these processes automated based on actual on-chain data. Maybe same direction of the question, still protecting users, but looking at it from the point of view of expectations of users, given that for so many years we've been living in a world where users expect chargeback, fraud protection, and really clear recovery paths from traditional finance. How do we educate them? How do we mold their mind, if you want, for the on-chain economy?
So I think it's going back to what I said already, but I think it's important to emphasize and maybe expand a bit. It's all about trust, right? If users feel like this is going to work for them, they're not going to lose their funds. There's no risks. They're not going to hear about any big, Luna incidents. Or things of that sort. That's, I think, the main thing that could bring new users into the space and start using stablecoins more. And I think if you're building stablecoins, to do that, to increase trust, you need to make sure that that your stack is secure, that the critical functions are being monitored, that you're minting, you're burning, you're pausing, you're freezing, all of the different roles, all of those are monitored, and you have clear actions, including automatic actions that can protect those functions, those roles, and that will increase trust, right? It will reduce substantially the number of incidents, and users will become more not sure what word I'm looking for, but they will start adopting more, is what I'm trying to say.
No, yeah, definitely. On that end, I think it's also important to just separate what will be the decentralized stablecoins from the centralized stablecoins here. And like on the decentralized side, for example, we at Immunefi on the crowdsourced security area, I've been working with a major project since ever practically, and we keep onboarding very new, cool decentralized stablecoins with like a really good approach to security, and even more recently, one from Tether itself, their latest project, but also a bunch of new, smaller, very cool projects such as Pinto, for example, offspring of Beanstalk. But then on the other side, like Circle and Tether, they have been on this, years-long battle to gain regulatory legitimacy or to improve their trust with the powers that be so that they can continue to operate their businesses. And they work with some security partners, but then on the other end, there's a lot of opacity in what their policies are. And so far, users have been fine because there have been no major exploits in those like two market leaders. But like, it's just thinking that the world will be the same tomorrow. And whereas Circle has like a different minting model with a bunch of parties, Tether is operating on a single single owner minting model. And so it may be the case that one day they get hacked and everyone will be wrecked. And even though they have other circuits in place, it's not great for user trust. They have that user trust because they have the Lindy effect behind them of being the first player and have been operating for so long. But it will be interesting to see those centralized players adopt some of the practices that the rest of DeFi has been using if stablecoin payments are to be anything else than just kind of a fintech play with crypto in its name.
I really like actually that you brought up this difference between centralized stablecoins and decentralized stablecoins. Maybe we go a bit deeper and we look how do we actually build these resilient decentralized stablecoins? What are some of the best practices?
Well, not doing what Terra did, for sure. But yeah, I think that's also a topic for a stablecoin design conversation. But I think bringing into just the UX security and user trust here, I think just it's important to think of stablecoins as also these very complex systems. And security is not just about like smart contract security here. It's also mostly about economic security, especially if we are talking about the decentralized players, as obviously. But then I think what matters then is to ensure that like the users are finding a good experience. And right now with stablecoin payments, this only happens if there's a card attached to it. And I don't think there's any decentralized stablecoin issuer with a card attached to it, but it will be interesting to see if we get that new network competing with Visa and MasterCard that's kind of crypto native and how that can then integrate with the rest of the world. Because then this brings us to another topic, which is that new network, if it's peer-to-peer, for example, maybe it wouldn't need to comply with all the cumbersome anti-financial crime infrastructure that exists now on top of Visa and MasterCard. And that infrastructure exists for a good reason, but at the same time, it also creates friction. And so for the dream of the decentralized stablecoins, it will be interesting to see if such a project could come up. And in this case, a card can be just a virtual card, right? We don't care as much to use physical plastic or metal cards these days. It's more just about, does it work with Google Pay or Apple Pay?
No, just something that you mentioned as well. Like if you have a decentralized stablecoin or anything that's decentralized requires economic security. So I would say that's an obvious best practice. And something else that you actually brought this up before, Bryce, about the experience of people today that like their credit cards are great and like, why do we need something new? And like, I think that is very true, and it depends on what jurisdiction you live in, but definitely in North America, it's relatively easy to access a credit card and payments are really seamless. But I think people will realize soon, especially with all of these yield products coming on the market that are like really abstracted and really easy to access. And like, you don't know what stable coin you're holding because you don't really care. Like you just know that it's US dollar denominated yield. That's like a huge disruptor to the traditional products that are available to people. And I think it might not be people realizing like, oh, like my payment system sucks and like this is a better. It could just be like, oh, I've been getting screwed by banks for so long. I didn't even know that I could be earning yield on my US dollars if I had like a foreign bank account. So sorry, not really answering the decentralization question. I already addressed that, but I think that's like a huge unlock for the UX with stable coins like the yield.
Yeah, I totally agree. It feels like that is where we're going to see mass migration to stablecoins in the US and more developed markets. And again, it's not necessarily going to be the way that people are transacting day to day, but it's still huge. I mean, like the Coinbase product for earning yield is attracting so many people in the door because they're like, oh, there's a trusted brand behind this. Aave just announced their Aave app that has $1 million insurance on balances. And it's starting to have that feeling of, hey, this can be a true savings account for me, which I completely agree with what you're saying.
We don't have much time left, but I would like to wrap this with some forward-looking questions. Which innovations, whether those are technical or design-driven, do you think would make the biggest difference for mainstream credibility in the next few years?
I think Bryce just said the thing that we were forgetting to talk about in this panel, and I think it's kind of the holy grail, which is the yield on your standard account. And there's been a bunch of innovation over the past months on that. This week as well, we saw very interesting announcements coming up with Aave at least 2 days ago, bringing something very interesting to market. Also with a $1 million user funds insurance. I was surprised because they call it insurance, and I thought they would just call it cover and have some internal mechanism to cover in case of issues, but they really called it insurance, and that's a big deal. The legal documents were not in display yet. They said they were going to release them upon the app release or something. But like the combination of those two aspects, like putting money to work for the user instead of for the bank on the one hand, even for accounts that typically, due to convenience reasons, will not be benefiting from that. And then on the other end, also guaranteeing to the user up to very decent amounts, like 1 million, is really a powerful combo. And so I'm really looking forward to see these coming up from other players in the market.
Yeah, maybe building on that, I think the question of how do we bring more users on board, a lot of this is actually just the boring elbow grease of distribution and folks actually using the existing building blocks that have been built out over the last 5 years to bring really amazing products to market. And we've been seeing a ton of really interesting attempts at this, and it's early days, but I think part of this is just like, need to grind on that product, need to market it to folks, need to get distribution through existing fintech players, and that's where a lot of the adoption is going to come from over the next couple of years.
I think all of that is great, and I think absolutely on point. But to add to that, it's a question of ease of use and simplicity for new users, right? Users who have never dealt with crypto, there's a knowledge gap, and it creates fear. So people, I've never done that. How do I do it? So you need to make it simple. You need the on-ramp to be simple. You need to do things like what Bryce is doing with eliminating the private key and just using Web 2 level interaction with the wallet. All of those things are super important. Without that, it's going to be very hard.
Yeah, I would say account. The more you can abstract away all of the underlying technology, just the more this will be successful. Like, people need to just use payments, and they use whatever's fastest, cheapest, most versatile. Like, it doesn't really matter what's underneath. So I don't think we'll be calling them stable coins, or like the majority of 99% that don't care about or know crypto, like they're not going to use stable coins. They're just going to use the payments option that works best for them. And I think a big unlock to that, in addition to the account abstraction, is just more products that are compatible with stable coins. So like FX markets, like other currencies in stablecoin format. It's not as competitive of a market to build like, even like a euro-denominated stablecoin or a Canadian dollar-denominated stablecoin. But like, if we want to actually completely disrupt the way that money moves around globally, you need those markets to exist. So I think that those things are going to get built as soon as it makes economic sense to do it.
We kept mentioning today a few times about building this trust and reputation. So I think it would be maybe relevant to touch this briefly. Do you see this will happen on-chain, off-chain, or maybe in a hybrid way?
I think it's going to be hybrid. And we're already seeing that. Like Aave, for being one of the most decentralized protocols, is bringing kind of centralized trust to this application with the insurance that they're putting in place, which drives a lot of confidence there. Insurance over time can be something that's done on chain at scale, but I think that is a bridge to cross from a communication perspective with consumers, and them being more comfortable with a centralized party, because that's what they've always known. It is, I think, how we start to get people onboarded. So feels very obvious that people are going to be tackling this from a couple different angles, but centralized maybe will be the first big wave of folks, and then decentralized will be the second big wave.
No, I definitely agree, and the Aave example is also very interesting, especially in light of another player outside of the stablecoin world for now. And the recent move for unification of a bunch of entities in space, so on the Uniswap side. And curiously, Stani went on the governance forum and heavily criticized their argumentation, and he was arguing for the Aave model and how their approach to decentralized, not corporate, but the governance structure will be sufficient then to assure the trust in the rest of the model, notwithstanding the fact that then the insurance component now is certainly centralized, at least with the information we have. And so it will be interesting to see how this fight plays out now, given that with Trump's administration recent moves, we are seeing this trend away from decentralized models and from the need for this sophisticated governance apparatus to justify surviving regulatory attacks, especially in the United States. And so there's clearly this fight going on which will be the prevailing, most sustainable model going forward. And for now, that means the hybrid is the answer, but I'm looking forward to see the decentralized side winning this race, at least on the higher end, more abstract, top-level governance model.
Thank you for that. I think we might actually have time for one quick question from the audience, if anyone has burning questions for our panelists. I see there something. No? Can we get a mic over there? Or just say the question and I'm gonna repeat it here.
Yeah, great question. So to repeat, what's the impact of nefarious activities in stablecoin adoption, and how do these play out? Yeah, nefarious activities are bad by definition. No one likes them. Crypto has these, kind of nuanced approach to dealing with nefarious activities for the good reasons that group that defines nefarious can control other groups by changing the definition of nefarious. But let's put that question aside and just assume nefarious is bad for the sake of being bad. Then I think what we're just seeing is, due to the market opportunity that exists, both in payments and business-to-business transactions, the stablecoin players, both centralized and decentralized, they want to win market share. And so they have to play by the rules that are dominant in that area. And currently, there's a big apparatus for anti-money laundering and other financial crime prevention mechanisms. And so everyone is playing by those rules. And I think that's good. Now we just need to improve those rules, because those rules haven't been designed for a world that can be made more efficient by our technology.
Yeah, that's a great point. I think to add to that, different protocols, wallets, exchanges need to have the right solutions in place also to protect against such use cases, right? So if you have AML or really any compliance, you need to be able to detect and block that. So that's a critical component as well.
Thank you so much. Unfortunately, we are at the top of the time. I would have loved to continue the conversation. Thank you to our panelists. Thank you to our audience. And let's give our great panelists a round of applause.